Growth-oriented investors tend to zero in on companies that are expanding at a pace noticeably faster than the broader market, because businesses experiencing elevated financial acceleration often draw amplified attention from traders and long-term shareholders alike. When a company produces this kind of momentum, its stock can ride a powerful wave of enthusiasm that lifts returns far beyond what the average investor might expect. Even so, identifying a genuinely outstanding growth opportunity is rarely a walk through a peaceful garden. It requires sifting through uncertainty, volatility, and the constant risk of mistaking short-term noise for true long-term potential. A major complication with growth stocks is that their rapid expansion naturally comes with higher than usual risk. These companies often innovate aggressively, spend heavily, and operate in industries where conditions shift almost overnight. That dynamic environment creates opportunity, but it also increases the chances that an investor may choose a company whose expansion phase is slowing or whose best days are already behind it. Because of that, investors often search for more sophisticated tools that help differentiate between superficial growth and sustainable acceleration. This is where the Zacks Growth Style Score becomes valuable. As part of the Zacks Style Scores system, this approach looks well beyond typical surface-level metrics and attempts to analyze the deeper drivers that reveal whether a company has meaningful long-term expansion potential. Palantir Technologies stands among the companies highlighted by this scoring framework. Not only does it earn a strong growth score, but it also carries one of the top Zacks ranks available, signaling that analysts see significant promise in both its current performance and its path ahead. When a company combines a high growth score with a superior Zacks rank, it often places itself in an elite category of stocks that historically outperform the broader market. Extensive research has shown that the companies with the most powerful growth characteristics tend to deliver returns above the market average. The performance becomes even more compelling when investors focus on stocks that pair a growth score of A or B with a Zacks rank of number 1 or number 2. That combination frequently identifies companies that are not only expanding effectively, but are also receiving increasingly optimistic expectations from analysts who closely monitor their fundamentals. To better understand why Palantir Technologies stands out at this particular moment, it helps to examine several key elements driving its appeal. The first and perhaps most influential factor is earnings expansion. Profitability is the heartbeat of every company, and when profits surge at a rapid pace, investors often take notice. Robust earnings growth suggests the business model is operating efficiently, demand is rising, and strategic decisions are producing results. Companies that generate strong double-digit earnings growth often display the hallmarks of sustained long-term potential and the ability to see their stock prices follow in similar fashion. Historically, Palantir Technologies recorded an earnings per share growth rate of 1.6%. While this figure may seem modest on its own, the forward-looking picture is significantly more impressive. Analysts expect earnings per share to soar by 77.1% this year, an increase that dramatically exceeds the industry's expected rise of 22.3%. The gap between those two figures underscores just how rapidly Palantir Technologies is expanding compared to its peers. When a company demonstrates such a commanding advantage in projected earnings growth, it often becomes a focal point for investors seeking long-term upside. Transitioning from earnings to cash generation provides an even deeper look into the company's financial health. Cash serves as the essential lifeblood of any organization, but for companies focused on rapid expansion, the presence of strong cash flow growth is especially meaningful. With more cash on hand, high-growth businesses can pursue bold new initiatives, expand their product offerings, and strengthen their strategic position without relying on costly outside financing. This not only boosts financial stability, but also creates more opportunities for long-term value creation. Currently, Palantir Technologies is experiencing year-over-year cash flow growth of 2.7%. While that number may appear modest when viewed in isolation, it stands considerably above many competing firms in its sector. For additional context, the industry average currently reflects a cash flow decline of 17.5%. That wide disparity reinforces just how strong Palantir Technologies' cash position is relative to its peers. When a company maintains increasing cash flow while the broader industry sees contraction, it suggests resilience, operational strength, and an ability to withstand uncertain market conditions far better than competitors. To build a more complete understanding, it is helpful to examine not only current figures, but also how cash flow has evolved over time. Palantir Technologies' annualized cash flow growth rate over the past 3 to 5 years sits at 18.9%. This number surpasses the industry's average of 15.2%, further cementing the company's leadership position in terms of financial momentum. The consistency and magnitude of this long-term growth demonstrate that the company is not relying on temporary boosts or isolated one-time results. Instead, it appears to be building a durable foundation for ongoing expansion. Another crucial part of evaluating a growth stock involves examining trends in earnings estimate revisions. When analysts update their profit expectations, they rarely do so lightly. Upward revisions typically reflect newly emerging data, improving business conditions, or stronger than expected financial results. Historical research shows a tight connection between positive earnings estimate revisions and short-term stock price appreciation. Stocks that receive steady upward revisions often outperform because they signal improving sentiment and stronger anticipated performance. In the case of Palantir Technologies, analyst expectations for the current year have been moving upward at a meaningful pace. Over the past month, the Zacks consensus estimate for the company's earnings has risen by 15.1%. Such a swift and notable increase suggests analysts have gained considerable confidence in the company's ability to deliver stronger results than previously expected. When combined with the company's existing growth strengths, this trend further reinforces the bullish outlook surrounding the stock. All of these factors together contribute to Palantir Technologies earning a growth score of A and carrying a Zacks rank of number 2. This blend of strong financial momentum, rising expectations, and consistent outperformance across key metrics positions the company as a compelling candidate for investors seeking exposure to powerful long-term expansion. When a stock demonstrates strong projected earnings growth, rising cash flow, long-term financial strength, and ongoing upward revisions from analysts, it becomes difficult for growth-focused investors to ignore. Taken as a whole, this mixture of metrics indicates that Palantir Technologies possesses the characteristics of a potential outperformer in the months and years ahead. Its combination of accelerating profits, strong financial liquidity, and increasingly optimistic analyst sentiment forms a robust foundation for future growth. For investors who prioritize companies capable of delivering meaningful expansion and long-term performance, Palantir Technologies stands as a powerful and attractive contender. Essentially, growth-oriented investors often see companies expanding faster than the market. The company's projected earnings per share increase of 77.1% far exceeds the industry's 22.3% expectation, while its year-over-year cash flow growth of 2.7% contrasts sharply with the industry's 17.5% decline. Over the past 3 to 5 years, Palantir Technologies has also delivered an annualized cash flow growth rate of 18.9%, surpassing the industry's 15.2% average, and analysts have raised their current year earnings estimates by 15.1% in the last month. This powerful mix of accelerating profits, improving cash strength, and upward earnings revisions positions Palantir Technologies as a compelling growth-focused investment with strong potential for continued outperformance. With that being said, I will see you in the next video.